Hey guys, hope you are all having a great day so far. Today, we are going to go over some updates regarding the debt ceiling issue going on and then go over important developments taking place in the housing markets, which spell big trouble for would-be buyers. Before we get started, let me invite you over to my Discord, linked below for everyone to join. If you are looking for day trading alerts, or even weekly ones that are stress-free, consider joining the Discord and checking us out. With that said, let's dive in. Let's begin with the important news regarding the debt ceiling. The debt limit agreement, negotiated by President Joe Biden and House Speaker Kevin McCarthy, is entering a critical final phase with less than a week remaining to secure congressional approval before the June 5 default deadline. Both Biden and McCarthy have been actively lobbying members of their respective parties during the Memorial Day holiday to gather enough support ahead of an expected House vote on Wednesday. However, they face anticipated opposition, and if they can't overcome it, the deal will have to go through time-consuming procedures in the Senate, risking the U.S.'s first-ever default. While Biden expressed cautious optimism about the deal, Representative Brendan Boyle, a top Democrat, stated on Tuesday that the measure has significant momentum within the party. The bond market responded positively to the news, with treasuries rallying and two-year yields decreasing by about 6 basis points. The S&P 500 remained higher, and the dollar continued to weaken. The bill sets the course for federal spending until 2025 and suspends the debt ceiling until January 1, 2025, effectively delaying another battle over federal borrowing authority until later that year. Democrats agreed to cap federal spending for the next 2 years in exchange for Republican votes on the suspension. However, there are disagreements between the two parties regarding the interpretation of the spending cuts. The first test for the deal will be the House Rules Committee, which controls floor debate and includes both Democrats and far-right Republicans critical of McCarthy. Some conservatives, including Representative Chip Roy, have already voiced opposition to the bill, and at least 10 GOP no votes are expected in the House. In the Senate, Senate Republican leader Mitch McConnell supports the deal, but only one other Republican, Senator Romney, has publicly supported it so far. They would need at least 7 more Republicans to overcome a potential filibuster. Conservative senators like Mike Lee, Rand Paul, Ron Johnson, and Ted Cruz have expressed their opposition to the legislation. The passage of the bill in the House on Wednesday is crucial for its progress through the Senate before the Monday deadline. Senators from both parties may also push for amendments to address spending caps and defense budget increases. For now, we continue to wait as Congress continues to play politics in Washington, fiercely defending corporate interests over our social well-being. Let's now dive into the housing market due diligence. As we have gone over dozens of times, if you're looking or even struggling to find a home to buy, the situation is expected to worsen. Home builders are not increasing construction fast enough to alleviate the existing housing shortage. They are finishing homes at a faster pace than starting new ones, and although improved supply chains are helping them catch up on backlogs from the pandemic, cautiousness prevails due to mortgage rates above 6% and broader economic risks. The lack of inventory in the existing home market persists, indicating that builders need to increase housing starts by around 20% to keep up with demand and match 2019 levels. However, given the uncertainties and challenges faced by the housing market over the past year, it is unlikely that builders will make that decision just yet. By the middle of 2024, another inventory crunch is expected in the new home market. The resale market has also experienced a dire shortage, with a decline in inventory. Demand is weaker, and homeowners are reluctant to sell their homes in the current market conditions. The number of new listings is lower than previous years, making it difficult for buyers to find opportunities. Buyers have found some refuge in the new home market, but the excessive caution of homebuilders raises concerns for the future. While builders still have a significant number of homes under construction due to increased production during the pandemic, the completion of these homes will lead to a shortage. Currently, the U.S. homebuilding industry is completing 200,000 more homes annually than it is starting, and it takes about a year to build a home. This means that by next spring, the number of units under construction will return to 2019 levels, resulting in fewer existing homes for sale compared to that period. Housing construction has well-known lags, and although single-family housing starts have recently increased, they still lag behind the pace of completions. At the current trajectory, the inventory levels are not just on track to reach 2019 levels, but they are poised to continue falling. To maintain 2019 levels, homebuilders will need to increase construction by 20%, and this action needs to be taken soon. As builders enter earnings season, they will share their thoughts on the market and their production plans. While some cautiously optimistic commentary may be expected, it is unlikely that they will adopt a newly aggressive stance. Construction activity may pick up slightly in the coming months, supporting the economy to some extent, but it will not be sufficient. Both the new home market and the resale market are expected to face dire shortages by mid-2024. For many homebuyers, the options are limited to new construction due to the scarcity of existing homes for sale. Existing homeowners are staying put, benefiting from low mortgage rates and making it difficult to find available houses. This situation has put homebuilders in a favorable position. Although mortgage rates have risen to nearly 7%, causing a decrease in demand and mortgage applications, luxury homebuilder Toll Brothers Inc. reported strong new orders in January and February. This highlights a growing divide between the existing and new home markets. Despite the high mortgage rates in 2023, buyers who are willing to proceed are increasingly turning to new construction. January saw the strongest month for new home sales in the U.S. since March 20, 2022. Typically, existing home sales surpass new home purchases, with the existing home market being about 9 times larger than the market for new homes. However, with the current market conditions, new construction is becoming the primary choice for buyers. Traditionally, it has been easier to find an existing home for sale compared to a newly built one, especially in areas that have reduced construction activity. But two significant changes have occurred over the past year. First, soaring mortgage rates have made homes less affordable, resulting in reduced demand. Second, homeowners who secured low mortgage rates over the past decade are either unable or unwilling to give up their favorable loans, causing a decline in the supply of homes for sale. While there was a brief increase in supply last summer, particularly in booming western metros, it has since slowed down significantly. This may be due to a one-time boost of supply when market conditions slowed in 2022 and homeowners decided to sell before a potential downturn. The remaining homeowners are those with low mortgage rates who are reluctant to sell when prices have fallen from their record highs, especially if they would have to obtain a new mortgage with a higher rate for another home. This situation presents an opportunity for homebuilders. Unlike homeowners who can wait for a more favorable market, builders continue to construct and sell homes regardless of interest rates or the housing environment. With limited resale inventory, builders face less competition, which works in their favor. They can also offer incentives and flexible floor plans to enhance affordability, such as price cuts, smaller homes, or temporary reductions in mortgage rates. As a result, 23rd of May see overall housing demand decline due to higher mortgage rates, but the new home market could grow as builders provide more options for buyers who are able and willing to proceed with purchasing a home. Ironically, cooling off the housing market could potentially worsen inflation, as building homes involves securing land, acquiring materials, and hiring construction workers, which drives up costs. Therefore, the current dynamics do not align with the Federal Reserve's goal of using higher interest rates to weaken inflation. Nevertheless, this is the direction in which the market is heading. Despite affordability challenges, some Americans still aspire to buy homes, and if new construction is the only available option, it will continue to drive sales and keep the industry strong. The housing market in America has experienced a significant shift, with a shortage of existing homes leading to a surge in construction, despite high mortgage rates. In the midst of the pandemic, the production of television shows about renovating, buying, and selling homes came to a halt. However, people stuck indoors started seeking inspiration and turned to television for ideas on home improvements. As a result, there was a surge in demand for renovation supplies, but the supply chain struggled to keep up. Lumber costs soared, and there was a shortage of workers and materials. Despite these challenges, low mortgage rates and a willingness to pay a premium led people to purchase homes, even if they required extensive renovations. As the effects of COVID diminished, inflation persisted, and mortgage rates transitioned from being extremely cheap to reaching sky-high levels. Mortgage applications dropped to a 28-year low as existing homeowners held onto their low-rate mortgages, resulting in a scarcity of existing homes for sale. With the reopening of the world, people started prioritizing experiences over purchases like lawnmowers and furniture. This shift in consumer behavior raised concerns for producers of home renovation shows. However, there is a twist to the story. The limited inventory of existing homes is good news for those seeking new homes. Builders have resolved supply chain issues and are eager to offer incentives to prospective buyers. Toll Brothers, a luxury home builder, reported record new orders in January, highlighting the growing popularity of new construction. Despite the dwindling supply of affordable homes and fixer-uppers, there is still a demand for housing, even if it doesn't require extensive renovations. On the topic of China's influence, while suspicions are warranted, there may be instances where the United States is being overly cautious. There have been discussions about preventing foreigners, specifically Chinese individuals, from buying farmland amid concerns that China may have plans to manipulate America's food supply. However, agricultural land ownership does not equate to espionage, and China does not own enough land to cause a food crisis in the United States. Government officials should focus on genuine threats rather than fueling unnecessary anxieties and paranoia. In the realm of urban planning, the concept of 15-minute cities has garnered criticism for being perceived as illiberal and socialist. However, while attention is directed towards bus routes and bike lanes, a larger-scale transformation towards greener neighborhoods is underway. Similar to the energy landscape reconfiguration in the 1970s following an oil shock, Europe and the US are now embracing nuclear power, coal, and other measures to strengthen power networks and improve energy efficiency. In the US housing market, the impact of higher interest rates has led to a distorted landscape. However, homebuilders have an advantage that buyers are seeking: inventory. This shift is a welcomed change for the industry, which was experiencing a downturn at the beginning of the year. Now, buyers are flocking to builders' sales offices where they are offered generous discounts and rate buy-downs, making it often more affordable to purchase a new home rather than a pre-owned one. Traditional sellers have become scarce, as homeowners are reluctant to move and give up their lower-rate loans. With new listings decreasing, buyers are tired of sifting through limited options. Mortgage rates, which have risen above 6% from around 3% in late 2021, have created a golden opportunity for builders, both large and small, at least in the short term. This unexpected twist in post-pandemic economics has boosted homebuilders' stocks and confidence, reaching the highest level since September. While homeowners choose to wait, builders have remained active and successful in the market. During the critical spring selling season, the purchase of previously owned homes dropped nearly 25% compared to the previous March, according to a Redfin analysis. Conversely, new home sales increased by 5.6%. Steve Alloy, the CEO of Stanley Martin Homes, expressed surprise at the surge in demand. The Reston, Virginia-based builder initially projected a 10% annual increase in net sales for the first quarter, but it turned out to be approximately 40%. This is partially due to the available options for buyers. Newly built homes now account for a third of the inventory, more than twice the normal levels. Many pre-owned properties on the market have lingered for some time and are unattractive to families looking for a quick move-in. A couple in suburban Nashville, Tennessee, B and Dion Richardson, grew tired of their small house and explored new homes. They found one at the upper end of their budget, priced at $314,000. Through negotiation with the local builder, they received $15,000 in concessions, including a rate buy-down to 5.5%. Ultimately, the new house proved to be more affordable than the resale properties they had considered, and it even included a fenced-in backyard. The couple sold their previous house and gave up their 2.9% mortgage rate, but they made a small profit on the sale and are happier with their new open floor plan. Builders can afford to offer discounts as materials costs have eased and profit margins remain substantial. During the pandemic, builders raised prices significantly as anxious buyers sought pristine dwellings with additional rooms and outdoor spaces. However, as mortgage rates increased, making purchases less affordable, builders had to slash costs to attract buyers. This strategy took some time, but it seems to be effective. With demand thriving, some builders are starting to reduce these perks. Stanley Martin Homes, for example, is scaling back incentives while increasing construction starts. The market is returning to a more normal state, neither weak nor excessively competitive, according to Steve Alloy. For sellers, the influx of new construction poses a challenge. In areas like Clarksville, Tennessee, and Las Vegas, where homebuilder subdivisions are prevalent, properties purchased within the past year are struggling to sell. Despite the shortage of inventory, buyers are not finding what they like. As a result, new construction accounts for a significant portion of sales, especially for first-time buyers, as the incentives offered are highly appealing. Overall, the housing market continues to change in ways that make it harder and harder for normal average-day Americans to obtain good housing. It's important to keep up with these subjects, hard as they might be, because they will have huge impacts long-term on both the real estate markets and on American demographics. For example, did you know that there is a very strong correlation between housing and childbearing? I have gone over this in previous videos. The less housing Americans have, the less chances they couple and have children. Already we are seeing a major reduction in childbirths, a problem that is expected to worsen over coming years. By 2030, about half of women are expected to be single, another huge deviation from the norm. As society fragments due to damage politicians allow to happen in exchange for profits, expect big drastic changes in your purchasing power, your ability to own a home, and reduced chances to afford children. Thank you for watching this video though its end. Let me know your comments down below. Join my Discord if interested in day trading alerts. I will see you on the next one, to the moon.